the bottom line is we're trying to avoid not only a serious recession, even potentially a depression. And fortunately, taxes have been cut. They've been cut substantially since the GST was introduced in 2000. So, and I think there's been a lot of, Malcolm Turnbull tried to get the Prime Ministership on the strength of his willingness to look at the GST, but as soon as he became Prime Minister, he found out it was just politically too hard. Something like this may well make it possible for Australians to say, look, we've avoided, we've dodged a bullet, we didn't go massively unemployed for a long period of time, businesses remained profitable and not bankrupt. We might just have to grow up and accept the fact that the GST should be 15%, like our Kiwi cousins across the ditch, and other countries of the world where the equivalent GST can be 18% or 20% or whatever. So I think that's going to be the battle going forward once we get out of this mess. But at this point in time, the government's doing the right thing. They're throwing all the money they can at the problem, and hopefully if the viral numbers head in the right direction, we might see a more normal Australian economy late May, early June.
And the government keeps falling back on this argument, Pete, that we were in a good position before this all hit, and our debt bill comparatively is doing a lot better than other nations.
And they're absolutely right. If you want to spend some valuable time impersonating an economist like me, Google comparative world government debt to GDP, and there's tables out there, and we're running about 38% of GDP before all of this. Countries like the UK, US were closer to 100%, Japan's 200, 300%. We are in a strong position to do this, so as a consequence, when we do need to fight the big problem of paying back all this debt, we can do it.
What about the stock market, Pete? Is the worst over?
Good question, and I know you're desperate to get in and buy it at the bottom, Pete. Look,
well, a lot of people are.
Yeah, they are. And look,
the hawks out there.
Yeah, my best guess, and it's only a guess, it's a gambling guess because I'm not using economic or market data here. I'm gambling on what happens to the virus data, infections and death rates in Europe. They seem to be improving in Italy and Spain, but then you go to the USA, that's going to be the vital one for the stock market. If America gets bad numbers over the next 2 weeks, we could retest those lows in the stock market. But if they don't, we have seen the worst of it. So I believe we will see down days until the numbers either tell us that America is getting better or getting worse. If they're getting worse in a bad kind of way, we could easily test the lows where the American market was down about 36% or so.
And they could still reach those lows despite the the huge amounts of money in terms of stimulus measures that President Trump is talking about.
Yeah. The stimulus measures have effectively put a safety net or a floor under the stock market, as the central bank actions as well, helping the money markets. All that's been good to help us. Our market has rebounded. We went down about 36%. We've come back about 11%. That's all been good to put a floor under it. And as long as the virus numbers start heading the right direction, I think the worst is behind us. But it's just going to get down to something that I'm not qualified to predict on, namely pandemic trend lines. But at the moment, the people I look at are telling me things are getting better, and we could peak here next week sometime, and the Americans could peak, in April 22, 23 or something like that. If that happens, the stock market will love it, and the worst is behind us.
Okay, all right, there you go. Peter Switzer, thanks for your time. As always, talk to you soon.
Pleasure.